We started here with no one. We now have 650 people here in our office in London. We're building a very significant new headquarters in Berkeley Square. That's probably going to be the nicest office building that's been built really since the wonderful Bloomberg headquarters here in London. So that's worked out. We're in a lot of different business lines, and we have a very positive view of the future here in Europe. We think we're going to be able to invest $500 billion over the next decade in Europe. We see it as a major opportunity for us. They're starting to change their approach here, which we think could result in higher growth rates. So this has worked out amazingly well for us.
Where do you see the best opportunities in the UK and Europe? Is it certain sectors? Is it certain parts of the economy?
Well, we see in real estate, there's always opportunity as you go through cycles. We've been looking on a global basis with very similar themes. With artificial intelligence, I see that Jensen Huang was here meeting with the Prime Minister at a tech conference and was talking about how the UK needs to invest more in infrastructure. Blackstone is the world's largest developer of data centers, and we're also the world's largest owner of data centers. So it's been a really core business for us.
It's been a pretty subdued year overall for deal making. So how do you approach monetizations, for example, at a time of heightened demand for liquidity from investors?
Well, we're in a cycle now where the markets haven't been accommodative to IPOs, and the strategic sales to other private equity firms are difficult because they're having difficulty raising money. Fortunately for us, we finished our money raising cycle, so we've got lots of money at the firm for these things. We're in an unusual position. But I think we sort of look at these things and say we sell companies when we think it makes sense. We've actually sold a good deal, surprisingly. It's because we have some very good companies with very good results. And the rest of it is involving putting more money into businesses to make them better.
What have you seen since Liberation Day in terms of deal making? You were broadly supportive of the tariffs by the Trump administration. Given the volatility, any second thoughts?
I think, what have we seen? We've continued to be buying things because we're long-term owners of assets. And when other people get somewhat disoriented or sort of pessimistic, we view the tariff situation generally as something that will be resolved over the next 6 to 9 months. And there are negotiations going on with lots of different countries. They'll happen at their own pace. But if you look at a world with an assumption that the tariff issues will find their way, and even if you end up with a base level of 10%, that'll be absorbed, with currency moves, with the shippers, manufacturers of product eating some of that cost, and the American consumer, eating some of that cost. You divide that 10% up 3 ways. It doesn't have a huge impact on inflation in terms of global growth. There may be a few tenths of a percent of change, but overall, it's something the world can absorb, and we'll be going on to be doing more buys of companies and other assets and sales as well.
Do you think some of these tariffs change the economy for a long time? That there will be, consequences?
There are always consequences. It's meant to be positive for the United States, which is why the administration's initiated it. How quickly the good parts will happen, those always take a while, and you could have some slowing for a quarter or two as we go through this. That wouldn't surprise me. But for us, as longer-term investors who don't get quite as excited as people do who are trading securities on leverage on a daily basis, that's enough to make one nervous. For people like us, we look and say, okay, what's going to happen overall to economies? What's going to happen to the world economy? Slowing for a quarter or two, in the great sweep of it, doesn't make that much difference.